welcome investors and all other interested parties. My name is Jānis Šķupelis. I am Chief Editor of Investoru Klubs. And today we are visiting Trentini and Invego's Group bond event. And this event is an opportunity for Latvian investors to meet management team of the Invego, one of Estonia's largest real estate development groups operating in Latvia, of course, Estonia and Portugal. And that is interesting because Invego's public bond offering is already underway. So, what is on today's agenda? During the investor visit and this bond event, those present will have the opportunity to learn about Invego's way of thinking, operations, and goals. There will be information about the bond issue and its terms. And of course, this will be your opportunity to ask your questions. And you will be able to ask those questions after all the presentations are done. So let's not delay and start. And the first speaker is the main man himself. So I give floor to Christian Thor Vehi, founder and CEO of Invego Group.
Thank you so much. Latvian. Sorry to do the presentation in English. I'm still learning my Latvian. Today, Tõnis, our CFO, supposed to stand next to me. We have to apologize. He got terrible stomach illness and didn't reach the plane. So I'm standing alone, and after Silver from LHV will join me. Let's start. Today is already yesterday, and let me explain. If you plan two things the way were done yesterday, how it has been done before, how it's been done always, then we already have lost, or in a certain terms will be mediocre. So our thinking is to think forward. In a real estate, to buy the land plot, to do the planning, to do the architecture, design, to build, and 5 years have went. And then people live or work there next 50 to 100 years. So our thinking is that today is tomorrow. We need to constantly look for tomorrow, everything what we do. The lawyers also asked me to say that today is not the investment recommendation, but rather overview how Invego does our things. Invego is a development company specializing creating a large-scale residential and commercial districts. We are not construction company. We never want to be a construction company, neither to bring a construction wing into our house. And that's because it's our decision to stay creative and agile and work top of the field partners in our field. Invego don't build house on the corner of the street. We build whole quarters with streets and the corners and the houses. And what is our most valuable assets? I would say that is our people and our experience. Here are some numbers about us. We have 10 years of experience in residential large-scale developments. During that time, we have delivered 1,500 homes handed over and occupied by residents, so people actually living there. Our current development pipeline comprises 500,000 square meter of gross development area. Invego Group includes 60 plus companies. Over the past 6 years, we have constantly ranked top real estate developer in Estonia with the number of homes sold. But we are especially proud that we are top 3 with the customer satisfaction and brand reputation. Now we have online joining us Tõnis, our CFO, who speaks about our numbers. We are not showing his face, unfortunately, or luckily. He's not looking good, but he will talk with us. Tõnis.
Good evening. Actually, I put my suit on, but unfortunately, you can't see me here. So, 2025 was an interesting year for Invego Group in different angles. First of all, this was the year where we finished our largest so far commercial real estate project in Tallinn. Since you're in Latvia, you may not know it, but we made a new district with 3 nice commercial buildings for the fintech unicorn Wise. Secondly, the year was important for us because it also celebrated the first public offering for investors from Invego side. It was different than this time. It was the Invego Latvijā bond, so only against the Latvian chain of our group. And this time we are doing it in even more diversified level, the highest group, Invego Group level. But even the Latvian bond was really a good success for us as we reached 4x oversubscription. And thirdly, I will point out that the year was important for us because we finalized our several years ongoing process to reorganize Invego Group so that it's more transparent and easily understandable for the public. So you investors, our clients, our banks and other counterparties. So 2025 was the year where we made our first consolidated IFRS annual report for the Invego Group, which included 40 different companies. Now we are here to speak that we have more than 60 companies and 55 of them are consolidated. And not to get into the figures too much, then I will say that this was the year that actually people got to understand what actually is Invego from the financial side. So we can now happily say that our balance volume is more than 180 million and consolidated equity more than 48 million. Please, next slide.
Thank you, Tõnis. I continue. Invego operates in 3 countries. In Estonia and Latvia, our 2 home markets, we have well-balanced portfolio in terms of both projects currently in sale and in pipeline. At the present, we have 5 projects in sale in Estonia and 7 in Latvia, and similar amount projects in preparation. Portugal is our newest market, where we have 1 project in sale and 1 project in development phase. We do our things with the heart, and we are proud that we are also recognized. Invego's formula is how we do things. I tried to explain it in a short vision. Our formula: top architecture, mostly through architectural competitions, usually international ones. We always use top construction companies, always through the tender. And why we require top construction companies? Because for us it's important that they have many years of experience, they have knowledge in their house, they are financially capable, they are bankable, and they also exist 5, 10, 20 years to serve our clients. And we finance our constructions and the projects with the top banks on the market. And these 3 elements together with Invego's track record and experience will start to work for us. There will be customers who getting best conditions from them, the banks. They trust us and they buy again and again. And nothing validates our work more strongly than repeat customers. Customers who buy their second or third home from us, buying their parents or their children homes from us and coming again. At Invego, our ambition is not to become large in terms of headcount, but to build our business together with the best professionals on the field. We consider it a true honor and privilege to work alongside with the best ones. Invego has a flat organizational structure, and we call ourselves a family. Our culture support every day each other. The mindset extend across the countries. There is people in different offices in Latvia, Estonia, and Portugal, and we work as a one team. This is our conscious choice. We are one Invego, just operating seamlessly across 3 markets. Here are our key driving forces. Marianne, construction and design. She's also here today. Kadri, marketing. Martin, legal. Tõnis, behind the microphone. And Henry, investors. And our Latvian team and some Estonian team are also here. Henrys, Markus, Laura, Kristina, Pauls, Walters. Thank you. I now give again word to Tõnis to recap Invego's subsidiary bond issue last year and what has happened.
Yes, thank you. Last year, as I briefly mentioned, we did our first public bond in the Invego Latvijā sub-holding level. I have to mention that Invego has gathered investors' money throughout its 10 years of existence. So dealing with funds and financing is the cornerstone in real estate. But last year we made it approach to the retail investors, and the result was really supported by the result was really good for us. We didn't expect that high oversubscription, and especially we didn't expect 1/3 of the bond issue to be marked from Latvia. Thank you, Latvians. We're really proud for you, because the estimations which were initially given to us said that we only get maybe 10% from Latvia. In addition to the financing that we get through the bonds, it's also important that we get new fans of Invego. People who are interested in Invego, in the news, people who are thinking about Invego, and people who at some point perhaps buy also homes from us. So the 2,000 new people who joined the Invego fan base is really important, and we are really proud of that. Invego Group is now structured under Invego Group OÜ, so Estonian entity, which has all the ongoing and future projects under the chain of itself. We have roughly 55 companies which are consolidating, and we have some from the previous projects which we didn't consolidate, but all which we consider important and are now included in the group. So it includes the Estonian companies, Latvian companies, and also the Portuguese project. What is important to mention is that Invego Group is currently fully owned by Mr. Kristjan Torvai, who you can see. And during this new bond term, which is 4 years, we also plan to implement employees' options. So there might be more owners, but ultimate owner will always be Kristjan.
I can continue now. The company's long-term sustainability over the next 10-15 years depends on a carefully planned and diversified portfolio. Diversification across the locations, the projects, the product types, the price segments is a key part of our strategy. The map provides how we have been planned and executed this strategy in Tallinn and surrounding markets over the years. Blacks are completed projects and blue and green are sale and development. This table here provides more detailed breakdown of our same developments on this Tallinn and surrounding markets, showing type of product, the times, how is the quantity of units, and what is the sale amounts. And these blue columns show the what happening with these projects in the bond period time. This slide presents the same carefully structured portfolio strategy in Latvia, meaning around Riga and surrounding municipalities. We have been building it up during the last 5 years, same strategy as in Tallinn and surroundings, and the colors showing same like in Tallinn map. First project, 120 home Parka kvartals has been completed, and the other projects are in sale phase or in development phase. And for companies such as Invego, it's actually optimal to have in every market like 4 or 5 projects in the construction phase and maybe some more in the sale phase. And if you look at the map, they are not competing with each other in the same time. So having 4, 5, 6 projects in the sale phase, we can serve the whole market, offering every client their need, their product type, their price range, their location. And a similar table also for the Latvian market. We are proud to say that during this bond period, we have all 3 markets, over 2,000 units in the planned. And it's not just planned because many of these projects are already under construction. That means that we have pre-sales done. Pre-sales required by the bank financing reached, and they are going according to the plan. Here are our projects currently under construction and in sale in Latvia and Estonia all together with the brand names. And here are our residential projects we have been delivered during the last years. It includes city center, apartment buildings, penthouses, row houses, single houses, and multi-building districts. And many of these projects, especially in Estonia, are well-known districts, and people know these names more than Invego name. We also successfully have delivered commercial real estate projects. Krulli Park last year finished 36,000 square meter commercial district. We have an anchor tenant, world-leading company Wise there, and the other project as well, including Telliskivi 51, was just finished, and Invego moved their office in Tallinn also in this building. And I'm especially proud that this Krulli Park received last week well-known advertising award, Golden Egg in design and branding design. Here are new projects launched for this year in Estonia and Latvia. 3 of them are in Latvia and 1 in Estonia. All 4 are launched now, 3 a little bit earlier. Nordale pre-launched just last week. It's a multi-phase, bigger district development, what will be developed during the future years. In Portugal, we currently have 1 project in sale and 1 project pre-development phase. And our approach in Portugal is actually exactly the same as in Estonia and Latvia. We want to deliver the same quality product and the standards what we deliver here in Estonia and Latvia. So meaning for us, it's we just doing there the same thing. And here is some image to understand the product and the location a little bit. I will give the slide. This slide where I give you highlights that key developments since I last met many of you last year. We are particularly proud that we are constantly remain top 3 company in a real estate as a reputation wise. As told previously, we completed one of the last 10 years biggest commercial development in the Estonia Krulli Park business district. It's fully leased and generating rental income and has won I think 6 awards plus the Golden Egg ones. In Latvia, we are actually really proud, and you should be proud as well. During this 12 months period when we last met, all our plans has been went exactly how we have been planned. And that's actually in a real estate world quite remarkable. The building permits has arrived when we expected them. The pre-sale has been reached according to our plans. The construction has started when we wanted to start them. The banks are financing how we want them to be financed. So it's I would say, I can't say that for every market, but in Riga and the surrounding municipalities, they have really taken well for us, and our cooperation with them is really something I'm happy and proud of. And we equally pleased that F10 Capital has chosen to partner us a second time with the bigger project, this time in Latvia, our Maarupe Sirs project. This year we're finishing a 5-year long, very successful project in Estonia, Uus-Järveküla, with them. Now I give word for Tõnis again.
As Christian mentioned, we have quite many projects in 3 countries. And before you could see the location of those projects, now you can see the development phase of the projects. Similarly to the locations, the phases of the projects are different. So the portfolio consists of relatively well diversified projects which we can handle in phases. So some projects are already in sale, some projects are in construction, and in parallel we are working with other projects will be implemented to the public in the upcoming years. On the right, you can also see 2 charts, and the upper one shows the forecasted future sales of those projects, and the black box shows the bond term. So the 4-year maturity of Invego Group bond is now shown in the number of potential sales from those projects. And the chart below shows the similar logic for the number of homes. So all things together means that during these 4 years of the bond, we plan to deliver to clients more than 2,000 homes and earn from these more than 600 million euros. You may ask, it's quite a big number. For us, it's a business case which we think is rather well think through. And since we are doing the projects not simultaneously, but as said, in phases, then all the projects we reached in the construction are backed with pre-sales, and we don't construct projects for just out of curiosity. We always do them for the market based on the market figures.
From the very beginning, Invego has been following 3 main principles. First, we always require a 20 to 30% pre-sale. That actually started years ago, starting our first project with our conservative investors. And that rule has been taken alongside for all these years. And that's actually very important because this pre-sale validates our project. Is it the right product in the right time, right price, right location, right design? And this having this 20-30% pre-sale is also required the banks who finance us as a rule in the region. Second, every project we do the tender for with top construction companies, and we always fix the price with the whole district or quartal or the development with this construction company. That gives us security that during our business plan is everything going according how we have planned. And third, same important is securing that price. We require the first demand bank guarantee to secure the construction company's price guarantee, meaning whatever happens with then the homes will be delivered. And as a large-scale developer, we have the let's say privilege to make the construction contracts the way that we sign the contract, we start the pre-sale or we're doing pre-sale, and then we have calling right. We see that this project has reached the required sales, then we start to construct. And looking back at past 5 years, it's fair to say that virtually every major risk has been materialized. During these 5-6 years, there was COVID, the war started, the Euribor raised, the construction prices raised, the material price raised. So, and during all these 5-6 years, Invego has executed all our plans and developments and finished them. So we have been, I would say, able to mitigate the market circumstances following our plans and the risks. So ultimately, let the track record talk about itself. Dennis?
Yes. Few words about the project financing and distribution of the funds. On the left, you can see a very simplified structure of a typical project Invego is developing. We use our own equity from the group, and we use co-investors who are mostly institutional investors' equity to leverage what we do to do more. With that equity, we typically buy the land, do the development activities like the design, and prepare everything for the public sale. When the public sale results indicate that the project is supported by the market, and then based on those clients or the agreements already with clients, we take a construction loan from the bank. The banks are very happy to finance our projects. throughout where we operate in Estonia, Latvia, and Portugal. We can always choose which partners we cooperate with, and the same applies for the banks. So from our perspective, where sometimes people say that bank loan adds additional risk, then since in the development field, the bank loan might be out, let's say 6 months to 18 months, then the building is completed, then the homes that we develop will be handed over to the clients, then we receive the sale revenue, pay back the bank loans, and get our profits. So for us, bank financing is kind of like bridge to reach our targeted result. And how the funds are distributed? First, when the sale revenue is received, and then we repay the bank loan. After that, we collect and or share the payments between investors and ourselves. Invego typically earns from 3 sources from a successful project. First, we get the share of the profit directly from the project based on the shareholding what we have. Secondly, we get a monthly project management fee throughout the project, which aim is mostly to cover the direct cost running the project. And thirdly, quite significant part of Invego's group funds come from the performance fee of a successful project. So out of the project profits, we usually get 20 to 30% before any profit is distributed between the investors. And that said, it means that we have built our portfolio so that we can earn easily back the funds which we asked from you, from the bond investors, within the maturity of the bond. So within those 4 years, we finalize projects and earn revenues from those. So there's no need to roll over any bond. We can pay it back from the normal funds. And in the next slide,
I would add for this slide that it's important to emphasize that Invego leads and controls all the projects, what we are doing and what is carried out under the Invego name. And in every project, we are also co-investors, meaning we have a skin in the game with our project we are doing.
Exactly. And in this slide and in the following slide, you can see 2 examples of actual projects with actual results. The first one is Tiskroja, the largest residential project we have had so far in Estonia. The project lasted 5 years and we completed 500 new homes to retail buyers. So there weren't any bunch of investors. There were buyers who bought them and the actual users of the homes. And what is important to mention is that since it's a residential district, the houses, there were more than 30 houses. There were 34 houses. So it actually looks like a small village for us. And the profit figures are on the screens. I can say the investors were really satisfied with the result.
Here I would like to draw attention to these images as this actually shows generally what we deliver, what we have been promised. The one of our projects years back was Vana-Peetri, and there the clients came for us giving us the feedback that our project is actually looking better than in 3D pictures. And that is like one of the best thank you for our clients. And these pictures showing that we are not just building houses, but Invego's concept is that the home is not inside of your apartment door, but everything and equally important what comes in the corridors, in facades, the architecture around the houses, the sports, these fields, the recreational areas, the landscaping, because these will actually give the value over the years. So meaning if our home buyer will buy home today, then they are not thinking how much their home will gonna cost 5 or 10 years when they actually start to change it. But they will be appreciated when they actually doing it and seeing that that was a right investment during that time.
And I will add that since our development portfolio has quite significant number of Latvian projects, then if any of you is looking for a home, then check it out. We actually do what we promise. But on top of that, last year, as already mentioned, we finished our largest commercial project so far, the Kruli Park. And it's also a very good case study. It was a development to a historical production area. So it wasn't somehow already planned there 30 years. It was Christian vision to do something crazy, something extraordinary. And as you can see, the vision is now fulfilled. It's fulfilled even better than I expected. So we have one of the best tenants in there, what we could expect. The buys, they are taking roughly 80%, and they're securing the performance of that project for years. So we still have 9-year binding lease, so they will be there minimum 9 years, and the annual EBITDA from that project is 5.8 million. Of course, we also have a bank loan in the project, but it has a surplus. So we have completed the project, and now it's one of the good cornerstones of Invego Group.
On this slide, I just telling that Invego has been delivering large-scale real estate projects over 10 years. And real estate projects need a capital, and the amounts are big. And because of this reason, we have always worked together with investors. And Invego haven't had a problem financing our projects. And doing the bond also serves the purpose as a marketing vehicle, and especially in Latvia. And we want that our Invego brand will be more known also in Latvia, and also that our clients can also invest into Invego. And there is no stronger enforcement of our work than the fact that in last year bond issue, more than 30 our home buyers actually invested also to our bond. We are in a long game, so we are building years and years or developing years and years ahead. So here we see some pictures what is under the development. Some of these pictures will be executed, some will be changing over the process. And something what is usually not visible before the project is launched is the work what has been done before that. This years and years preparation, buying the land, creating this product and on this land. And one example what I give is that we have in our own sales team in Estonia and Latvia, and the example work what they do, they are registering their interest. And in Miera residence project in city center in Riga here, there was over 1,000 registered clients. And our team took effort and called every one of them, asking what they think about that project, what they think about location, what they think about the price, what product size-wise they need, what price they are okay to pay. And that is important to before launching that product and creating the details in this product. And 4-year bond period is, I would say, perfectly aligned with our business activities and project pipelines and cash flows. Dennis?
Yes, now it's the best part, the figures, the analytics. I'm not going to read everything, I'm just going to highlight what I think is the most important. The first slide gives you a very rough overview of the macroeconomics in our core markets, Estonia, Latvia, and Portugal, as well as the euro area. What is the key conclusion for the two largest markets, Estonia and Latvia, is that despite the difficulties we have had during the past 5 years, as Christian already mentioned, the wage growth has been very solid and it's continuously going to grow according to the central bank's forecast. The wage growth is also one of the key elements that actually supports residential home buyers' potential to buy a new home. On top of that, we have a very strong financing market. So if someone says that they couldn't get the loan from a bank, then it typically means that they wanted to get too expensive home. But if you charge for, if you're going for a reasonable deal, then the bank financing is really supportive. And since the Euribor rate is also now stabilized around 2%, then it gives very solid macro environment for our activities. And on the next slide, you can see very brief overview of the Estonian residential market. I have collected here some figures, but in principle, what you can understand from those is that the level where Estonian home buyers market operates, it's more or less the average of a longer period. And for us, operating in a stable market, which every year has transactions, is very good. We can do our products, we can forecast them, we can do new projects in business plans with relatively well done forecast, and this is very good for us. In addition, in Estonia, there is additional boost from a tax reform. The government changed the income tax structure for higher paid people who are typically our new home buyers. So there's going to be even expected to be even higher sales in upcoming years. Similar figures are in the Latvian market. Probably you know the Latvian market better, but if you're not a real estate expert, then don't worry. I have collected here several market reports, more interesting numbers. And the figures that you can see are slightly different. So in Estonia, we had quarterly numbers. Here you have, you can see the annual numbers. But more or less what the market speaks to us is that the demand for new homes is in Latvia as solid as it is in Estonia. However, the number of competitors who are we competing with is much lower. It's 3 times lower, I can say. And when we even focus to the segments that Invego is building and developing, then in our target segments, which are slightly more premium than the standard new development in Latvia has been, then in this segment, the competition is quite low. We compete with the same Estonian developers who we compete in Estonia, and we have done it very well in the past 10 years. So we really feel confident about the Latvian market. And since we have launched new projects, then already from this year, we plan to be constantly in top 3 developers in Latvia. And the next slide shows a brief summary of the Portuguese, especially Algarve market. Algarve is the southern region of Portugal. And since our client base in Portugal are not the local people who buy the first home, these are mostly, the project is targeted to the Western and Nordic people who buy a second or third home and want to be there as a climate refugee. And then also the market information here is about that. What is the best competitive advantage for us in Portugal is that we have all the plannings, the detailed plan, the local planning in place, and the local municipality is very supportive. This is not the case for all the developments in the region, and normally the planning laws are very strict, and it's quite hard to get the new project running. We have already completed this, and the project is already in sale, and construction will start in this year. And a few figures. There's more financial information in the information document of the bond, but it shows here the key things from the balance. On the left, you can see the assets, so the activa, as the accountants say, and on the right, you can see the liabilities and equity. Since we are in a field where we need a lot of financing to deliver the projects, and then in addition to our own equity, we also use the bank loans, which are majority of that long-term liabilities. And when the project is going to be completed this year, then the same bank loan goes to the short-term liabilities. But we always use loans from the banks, which are in line with the project timeline. So there's relatively low risk of financing for us. And on the asset side, when you look at the figures, you see that we have a lot of real estate. And a couple of words might be confusing for you, but according to the International Financial Reporting Standard, what this IFRS means, we have to classify our real estate as three different categories. First, we have the already developed, up and running commercial properties, which are called investment properties. And secondly, we have the residential districts, what we can consolidate under the accounting logic as inventory. So inventory is not always like a half building or something. It includes all the land, all the construction, as well as all the fully finished homes, which are under the sale. And the same actually is under the receivables. It's just the accounting logic that the project where our direct ownership is below 50%, and the auditors say we don't control it, then it's receivable from a subsidiary. But in principle, we as business people know that all those projects are actually controlled on a daily basis by us, and inventory plus receivables show the amount what we have as a residential districts. And as you can see from the changes from last year to this year, and then we have launched new projects, we have started new constructions, and for us the market is really working well. And last but not least, the equity what we have as a consolidated level is 48 million. And before I give the word to Silver, then the bond issue is important for us in several metrics. It's the first highest group bond we are doing. So this is the first Invego Group bond. And the term is 4 years to be in line with our project's timelines. And the issue value is 4 million with option to raise it to 8 million if there's oversubscription. So pretty much it's a similar term that we had with the Invego Latvian bond, but it's important to notice that the bond issuer is different, so it's even more diversified portfolio what is against it. And the coupon rate is 9.5, and now I give word to Silver. He can say why it's 9.5 and what else are important in the bond.
Thank you, Dennis. Also, Christian, thank you so much. Super happy to be here, second year in a row. At LHV, we try to only work with top quality issuers. I think Invego is definitely the best at building beautiful environments where people want to live. So yeah, thank you for the opportunity. If we are, firstly, I'm going to talk about the Baltic debt capital markets, and then give you a short overview about the bond terms and conditions. Last year was a record year in Baltic debt capital markets. So we saw total 2 billion of issuance brought to the Nasdaq market, out of which 1.7 billion were brought to the regulated market and 300 million to the First North market. Definitely, we saw that the Latvian issuers were really active. The Latvian volume was also the highest, thanks to Latvenergo, Elering, Riga Students issues last year. From Estonia, there were 12 bond issues, out of which 8 were real estate issuers. Also, worth to mention that Invego Latvia, a bond issue, had the highest oversubscription last year among those 8 Estonian real estate issuers. If we are looking at the secondary market volumes, then it's roughly 1/10 of the primary market volumes. If the average ticket in the primary market is roughly 5,000 euros, then in the secondary market is 8,000 euros, so slightly more than in the primary market. Another point to mention from last year, as I mentioned, definitely in Estonia, the investors really like, and I would even use the word love, real estate. So people in general want to own real estate, and this is also seen in the Baltic bond market. So all the real estate issues were highly oversubscribed, and also if in LHV, like the questions what we receive in the bank is also related to those real estate issuers. And that brings me to the fourth point, which is the investor dynamics and the change in the investor dynamics. So we see that, at least in Estonia, I don't know how it's in Latvia. Maybe later we can talk with Jānis about how the Latvian retail investor community is developing. But in LHV financial portal, we receive lots of really good questions. People are doing their credit work. If they don't get answers to their questions, then the bankers are always helping, and also together, for instance, with Invego Group, we are trying to answer to every one of the questions. This is a really good development that we see, because 4 years ago, when we were introducing new issues to the market, then we received only like a basic questions, but now it's definitely seen that investors are becoming more knowledgeable. The second maybe good trend is that we see many new fixed income funds. For instance, in Latvia, Signet Corporate Bond Fund. Also, there are some new emerging fixed income funds in Latvia. In Estonia, there are at least 2 bond funds that I know that got established only last year. Lithuanian bond market has been quite active over the past 10 years, and there are many fixed income funds. This is a good development. And lastly, maybe on a negative side, is the pension money. In 2021, when we had the second pillar pension reform, so starting from that date, basically, we didn't see pension funds active in a Baltic bond market. So that trend now is the same in Lithuania. So this is on the negative side. But now if we're looking at this small, tiny slide here, in below here, you can see the XY chart. On the x-axis, you see years to maturity, and on the y-axis, you see yield to maturity. I have outlined all the 12 Estonian issuers that came to the market last year. If we are looking at the right side, here you can see the bank's tier 2 bond issues, big bank and in-bank. They issued at 6.5 and 6.25. In a secondary market, as of last Monday, prices, they traded at around 6%. Today, Coop Bank announced that they also started their subscription for 6.25 tier 2 bonds. If we are looking at the shorter tenor, Eesti Energia, the state-owned company, issued 50 million euros at 5%, and now in a secondary market, the bonds are trading at around 4.5. And in the middle, you see many real estate issuers. Maybe the best comparison to Invego Group bonds are Hepsor. They issued at 9.5 last year. Then also Arco Vara, they issued at 8.8 and now trading at around the 8% area. And why 9.5? Now, it's a good question. I think from one side, we have to look at the primary bond market, like what have been the interest rates there. And then secondly, why I wanted to show you that slide is we are leaving, in LHV's opinion, around 50 to 100 basis points above the secondary curves. So I think this is the premium that the issuer has to pay to the investors in order to raise this 4 to 8 million euros. Now, if we are going to the next slide, Tõnis highlighted maybe the most important parts already, but as last year it was a holdco, Latvian holdco, unsecured bond issued, and this time it's a topco debt. The topco doesn't have any external interest-bearing indebtedness, so it will be the first and then only senior unsecured bond. The issue date is on 26th. The tenor is 4 years, as we talked about, but it's important to highlight that Invego has the opportunity to call the bonds 1 year before the maturity date. Of course, the interest will be paid out quarterly. Also important to highlight it's a public offer in Estonia, Latvia, and Lithuania. And we do have the sales agent in each countries. Maybe another important fact is that the bonds are offered on a basis of information document. It's a 47 pages of document. If you have any questions about this document, we are happy to take all the questions. And then the bonds are governed under the terms and conditions. And then under 9.2 clause, there are 14 undertakings. I think the most important undertaking is the adjusted equity ratio that's written into the terms and condition. And then Invego Group has to start publishing semi-annual reporting, and where we also monitor the adjusted equity ratio. I think with that, I will give a word back to Kristjan. Thank you.
Thank you, Silver. From LHV, Silver Kalmus. I would add that all the slides and a couple of more are available in Invego website under the investor menu. So you can easily look them in home or and why invest? That's of course up to your decision. Why I would invest? I would point out our team, our experienced and fully committed team, and our experiences. The second thing is our diversified portfolio. In Estonia and Latvia is our own market. We have one Invego. It's just two different cities. And the third important is that we have brought everything under the group, and this bond is issued on the group level. And that said, I will now give the word to the Jānis, and we answer all your questions.
Thank you, guys, for the presentations. I hope also tennis is hanging on alive somewhat, right? Okay, so now it's great. So now it's time for your questions. Be brave, as this is your opportunity to know more about Invego. So let's start, and we do it, I guess. Yeah, raise your hands and.
Hi, I'm originally from Latvia, but I actually live in Estonia, so I'm familiar with all the projects. I have a question: if there is any project that actually you had to cancel because there simply was no interest?
There, during the 10 plus years, we have the projects what have been taken more time or haven't been so successful, but there haven't been any that we haven't started at all. There are some what we have land, and then we are looking that it's not best fit for Invego, and maybe we're doing the planning and the projects, but we sell it out, and we are not developing it ourselves.
Why do you think Latvians is interested in your bonds?
That's really interesting, as it was said earlier that in the last year bond we did, the Latvian interest was really, really high. Usually in the Baltic bonds, Latvians are usually around 10% bond markers. And last year Invego bond was 29%, so around 30%. So, and that means that we have been recognized on that market, and we are doing something right.
And if I may add, then we have met during the bond roadshow also with 4 Latvian private banks. And the feedback has been really supportive also about what we do in Latvia. So the bankers see that Invego is filling a hole in the Latvian development market. And I think that this is also kind of like a recognition for us that yes, please come and please deliver nice homes for us.
And I would add that I think that shows that that Latvia is our home market, not some secondary. And we are really proud of that. And I think our team can be also really satisfied.
Good evening. Thank you for presentation. My name is Sergey. The question is, after your 10 years experience, you have a trust from the banks and you have enough assets to push new projects. Why you need private assets? Because the bank's rate gives you much better, about 6, I guess, yeah? And you can cover about 70-80% of the project. So why you need private assets from private investors and customers?
Yes, I thought Christian will answer, but thank you for the question. The answer is very simple. We have a very competent team, and we don't want to do 4 or 5 projects. We want to do as many projects as possible. And therefore, we take the banks together with us when we do the construction. Therefore, we do take the co-investors with us when we buy the lands. And the bond is just one reasonable instrument what the Western world has used for centuries. In the Baltics, it hasn't been the case, but we see that it fits our needs, and we can use it as kind of mezzanine between one project to another project. For example, in the new projects we launched this year in Latvia, in the first phase, we also have to construct not only the building itself, but the banks are easily giving us the loan, but also the infrastructure. And the infrastructure will be used by several phases of the projects. So in the first phase, we sometimes have a higher need for capital, and the bond is a perfect match for that.
That said, yes, that in every project, we have our own capital together with the co-investors in project levels, and the banks financing construction. But there is this like a mezzanine part, what is required especially in starting the bigger new project. What is this equity part for infrastructure and these elements, and that bond will allow us to then launch like this year 4 new projects, to serve the market better. I would explain that the mezzanine interest rate 9.5 is quite normal so it's not so special. In the construction financing, yes, you're right. The financing cost is around 5-6%. The cash flow object, the commercial real estate, there is even lower, like 4 or 5% together with Euribor. So, but in the mezzanine part, this is normal. And as our target equity return in our projects are between 17-20%, and if everything goes well, over 20%, then this 9.5 is perfectly aligned with that.
Is this a warm-up to IPO?
Thank you for your question. That has been discussed. We will continue our work, and we will see if there will be a right time, then why not, and maybe.
What do you think about the future geopolitics of the region, and how would it impact your future investments? Because there's a growing worry in the region that there could be some nasty, some future war possibility, actually. I mean, I don't want to voice it that much, but I always see some interesting articles backed up by some real intelligentsia. Like the last time it was the Lithuanian intelligence said something, and then Sweden. So, do you see any like future risk, and how are you planning to cope with it?
Some smart person has said that during the tough times and the war times and that, you need to continue doing what you know best. We are developing the homes, and we see a stable market in Estonia and Latvia, where are our home markets, and we continue doing that. Yes, there are the risks around the world happening always, but we need to continue doing our thing.
And if I may add, then the 30 years of independence, or slightly more, we have had in Latvia. All the time there have been some discussions that whether Russia will conquer us. In 1994, the Russian troops left Estonia. And since then, like the Western media has always been slightly like pessimistic about our region. But I will recall that now we are in NATO, now we are in European Union. We have very strong ties with the Nordics, with the Western Europe. So even if Trump is doing whatever he is doing, then I have full confidence that the situation in Ukraine and the Baltics is very different. So as Christian said, we are doing the best what we can, and we see that 90% of the Riga housing is old and outdated, and we want to bring you better homes.
I know I asked this also in my interview, but how do you choose your projects?
That I think is the crucial moment of every project success. Now I don't want competitors to listen, but I will tell you a little hint that Invego doesn't operate on the place where everybody else wants to be. Example, Riga next to IKEA. Our project Vitolu Parks on the corner of Tunte Street and Vitolu, there are 2 parks, and between that was an old industrial area. So we saw our opportunity there. We bought the old RAF factory, and now their new homes are being built there. And the clients really love this location, the greenery, and the special location. The first stage, like 2/3 has been sold, and we just started to sell the second stage. A similar comparison is the Nordale, our newest project launched last week, is in the middle of this Pikerneki forest. There is old industrial area. So it's in the kind of national forest where you can't build anything, but inside there is old industrial area, what we are turning into the residential development. So we need to look the locations, what is desired by the clients and what are special.
One thing I just wanted to advise to property developers, and it's nothing to do with bonds, but while you are here, I just want to say, I think there's a real lack of 3-bed flats in the Baltic region. It's almost, it makes me feel like Baltic developers, they just don't want families to grow. I see like tons of families with 2 kids, just 2 kids, and they are suffering from like they can't find any 3-bed flats in Latvia's 4 rooms. And if they do this, and if they build 4 rooms, they usually somehow put these nice 4 rooms, 3-bed apartments in the very back of the building, which gets no sun at all. And then the kids should become some zombies in the long term, I guess. The kids, they need the most sun. So I know tons of people looking for like 3-bed flats, and they always fail. Maybe as developers, you can just note it, and also maybe talk to your other developer friends and keep that in mind. I think in Baltic region, you need bigger space for families with kids, and maybe you can eventually prioritize this in your future developments. Just a feedback.
I would like to answer for that. Actually, I have very good news for you. Invego has a lot of 4-room, even 5-room apartments in the Maarupe series, in Vitol Parks and the new Nordale project. You can turn to the Walters or Henry's and ask about these. That has been actually success for Invego in Estonia to developing these family apartments. Of course, the price level raises when the apartment goes bigger, but we try to solve that with the good solutions that and also that we have brought in Estonia. It has been very successful for us, this Scandinavian dream called row houses developments. We have started that in Latvia as well. It's not yet well known, but that's the kind of good step for young families who are want their own house but not afford it. So yeah, I'm actually happy about that question.
And if I may add as well, that's always the question of what to do. And as Christian mentioned, family homes is the key thing for Invego. We have also done our competitors' analysis and visit at Bonava and YIT, and they do smaller apartments and even less rooms than normally we do. But that's their concern. We see there's as you said, there's a room for us in the market.
Yeah. So how do bad local demographics affect you? I guess we partly heard that. Yes. So
it is what it is. We can't change that. We see that actually the markets in Riga and surroundings and Tallinn and surroundings, they are really stabilized. So the maybe the people moving outside from Riga to the Maarupe or Adasi or something like that, but the demographics is not changing anymore so rapidly as it has been changed 10, 20 years ago.
Okay, thank you.
And another angle to the question is that there's a lot of old apartments in Riga. And we don't think that all the people want to live in Khrushchevka or Brezhnev type of apartments. We think that the people in Latvia and Estonia are more or less the same, the salaries in comparable jobs. I don't say every job, but comparable jobs are similar. Therefore, the affordability to get a new home actually is in Latvia better. And since the 30 years of independence hasn't brought many new developments to Latvia, and then we are filling the gap for those who want a new home. It doesn't mean that everybody has to live in a new home. Just we see that there's enough of those who can afford it.
Yeah, my question is kind of a little bit touching the same subject. Basically, how do you expect the profits from Latvian projects if, I'd say, roughly construction costs are the same in Latvia and Estonia, but average square meter price in Latvia is, for new projects, I guess in Riga is roughly 3,000, but in Estonia is, I don't know, 5,000. So the returns might be smaller. And the same question, is the purchasing power of Latvia possible to reach basically higher prices in near future?
That's the very good question. I have been talking about that topic in Estonian media a lot because the price different in the same product in a different price levels are roughly 1/3 in Tallinn and Riga. And why it is that? Its construction price is similar. The profits in the real estate developments is similar. The salaries is similar. The difference comes from the land price and how long the project will take. Example, in the Vitolu Parks project, 360 homes, so quite big development. From the day we bought the land and started the construction, it took less than 2 years. In Tallinn, it takes 6+ years, usually 10+ years. And if you think the equity you put down buying this project, then this equity cost, if you calculate it, I don't know, 17% per year, that kills this or make this different. Is 1/3 is actually the bureaucracy time. So I really hope that the prices not raising here in Latvia, but falling in Estonia if the municipalities get this bureaucracy under control.
And another angle, I just want to say over that the profit margins we are taking in Latvia and Estonia are similar. What is different is also, in addition to the bureaucracy, is the initial land price. Tallinn has sea, Tallinn has Lake Ülemiste. These are geological issues which limit the space of the city center quite a lot. In Riga, you have the river, but more or less you don't have any limitations for the growth of the city. So there's plenty of land, there's no buildings, and plenty of land for us as a big developer to do large-scale projects. So the land prices are the key difference.
And forever question, what will happen to prices?
What will happen with prices? I think they go along with inflation. So they will raise, but hopefully not too much in every year.
Why Portugal?
We wanted the old Europe market as our third market in a different regions. One that we saw in after the COVID that was kind of one less developed area in Europe on the seaside. That's why we are in Algarve region. The other reason is we wanted something motivating for our team to have something in the old Europe and in this warmer region. And if you look back during these last years, then this Algarve market has been the most raising market in Europe.
Okay, how risky would you yourself say these bonds are?
We believe what we do, and we are doing them in the highest group level. So, and this, if you look at our diversified portfolio, then even if let's say some project or one project is not doing so well, that gives us this confidence that our bonds are quite secure and we are fully capable of paying them back with our cash flows. So because the different project will give us this diversified the business model.
Both Christian and myself, we are investors ourselves as well. And any investor should understand that if there's a risk of like a state government bond, as Silver mentioned, 3-4% return, then everything what provides higher return is riskier. And investors should consider that there are different risks. But at the same time, as a business managers, we are doing everything ourselves to mitigate those risks. So whatever happens, we plan to fulfill the on the investors' quarterly interest payments, and we plan to fulfill the obligation to pay it back in the end.
When to buy real estate? How can one answer this?
That question has been, I think, thousands of years. But I would say that you need to separate buying home and buying investment property. There is always right time to buy home because you are not getting younger, your kids are raising, or your marriage, you need to live your life, and you spend in your home half of your time or even more. So there is always right time to buy home. And if you think the investment, then look at separately. Because there is not better feeling that going to the home or owning the home or feeling this time and good memories in home.
Yes, how to sell it then?
Yes, that question you can ask separately from Walter's and Henry's, our sales specialists. I think you need to sell it well. That actually starts what you buy, when you buy, from who you buy, what location, and what product, what quality. So that starts to play a role. Like I explained, you shouldn't look the square meter price or just the square meters inside of the apartment, but you should look how much invested on the area. Is this area is reputationable or and good in the future standards? How much developers spend for the architecture, everything surroundings around the house, landscaping, the playgrounds, recreational areas, all of that starts to play a role. How much your real estate, what you're buying today, will gonna cost after 3, 5, 10 years. So that young people usually buying first home, they are not thinking about that. They're just thinking that I want to get the cheapest home and move in. But they should look, because every person, the real estate, buying the real estate is one of their biggest investment decision in their life.
I have a little bit of a question about Zaķu project. It's very lovely on the pictures. Is this like a challenge for the waterfront?
That's a good question. Yes, we are preparing that project very well because it's important, the new location, this Sakusala Island. And let's say some of the clients are probably overlapping. So we want to offer the second choice for the Riga waterfront.
You mentioned in the interview that some investors in Estonia are buying the first buyers of these projects, yeah?
Yes, that's many of them has been understanding the market, that if you buy from the paper before this district and the development doesn't exist, you're actually getting the price, this appreciation. Usually if we look making a business plan, then let's say the business plan price medium is here. When we start our first home sale without anything, construction haven't started, we're starting even much lower than our own cost, because we need to sell the first, 20-30% of our homes to reach the bank financing terms, to reach our confidence. And it's okay that our first buyers who trust us, they winning as well. And we have seen here that some of them have followed to the Riga market as well and buying here our project also first apartments when they are on paper. So if they are willing to wait a little longer, then there is normal that there is price appreciation.
Bonds give a 9.5%. If I take on a private account, I should pay 25% to the government, like a tax from income. Do you have a tool to pay loan for your property from the bond profit? Avoid 25%.
The private investors have to pay the tax. In Estonia, there's a tool how to postpone it to the future when you use the investment portfolio system we have in Estonia. But we don't know that there's a such system in Latvia. So unfortunately, if you are a Latvian private investor, then your state takes the tax before you get the interest.
Okay, what will happen to all the Soviet apartment buildings?
Yeah, I'm more interested in the topic. So the quick answer is that we don't know. The longer answer is that it depends on the location. For sure, in city centers and locations where the location is very good, most likely those buildings will be renovated and they will be used for decades afterwards. But what we have seen in Estonia as well, that the price difference between really old, not renovated building, old but renovated building, and the newer buildings, there always will be a price difference. So if someone thinks that it's the best idea to buy old apartments in Imanta, and then I wouldn't advise that. In Estonia, in worse locations, we have even seen that when the demographics go down, some buildings are half empty, then those apartment prices are the lowest, and sometimes the whole building will be demolished when there's no need for that. But I think in case of Riga, it's hard to imagine that like half of the city will be demolished. So most likely those buildings will just remain as they are, and they will not meet the modern requirements of people, what we expect in the homes. So they're just different products for different people.
That said, it's clear that it takes years and years for these buildings to kind of move out of the market. I think today's generation will live there. Young families moving out, so maybe less people live in these apartments, meaning the more square meters they start to use. And then in a longer term, 20 years maybe, then even then it will be the situation where these will be actually empty, and then what to do with them is the question of the cities.
Or if you expect to get a lot of refugees to Latvia, then these will be the first places for them to live because they're the cheapest.
All right, any more questions? If that's all, then we can finish this section, yes? Maybe the last brave ones? All right, thank you guys. Thank you, Dennis. You are a very resilient man, I think. But yeah, and that's not all actually. That doesn't mean that this whole thing, Invego Group's bond issue event is over, because I give floor also to Trentini CEO Andrejs Kaļievs, who I think is ready to take us to a great adventure. Yes, is Andrejs here? Oh yeah, I was looking for you there. Okay.
Hello, my name is Andrei. I'm a CEO and co-owner of this company. So thank you, Christian, for giving this opportunity for us to welcome you here. It's a great pleasure, and this was I think, perfect presentation, a lot of interesting things. So I will not take a lot of your time. I will not tell you a lot of things about how wonderful we are, how wonderful is our team, and how great it is to be our customer. Then you can try it yourself. I will come to maybe more business part of our business, let's say, and we'll explain you some numbers and things that might be interesting for the bigger projects, for contracts, for a project like yours also, and what we figure out working on the market for the last, in general, we are working more than 20 years on the market, but for the last 3 years, I think after the COVID, the market has changed radically, and what we felt on the market is that there is a lack of understanding and transparency of how we are operating. We, I mean, as companies like like dealers operating, a lot of hidden costs, a lot of talks about discounts and everything. And so we decided to change our approach. Actually, I think we're not, maybe we are one of the first companies in Europe who started to work like that. At least our brands that we represent telling us this. So I will quickly introduce you to our direct value approach, which is little different way how we deal with the contracts and bigger projects. So this is our beautiful space. This is actually all the countries we are working in. So it's some of, for example, we just finished a hotel in Iceland, and we have also a small office in Marbella, not far from Algarve, but maybe we'll be there also. And then we are operating almost in every European country and outside Europe also. We are selling all type of interior design products. So starting from residential furniture, lighting, sanitary, finishing materials, office contracts, and kitchens. So about the market, this is what I told you already, that what we feel is that the process of purchasing our items for the contracts become more complicated. And so this is our direct value approach. Actually, I will skip all our beautiful brands and come to the main file. So here, as you see, if we're talking about the contracts, we are operating as the official dealers. So we're always operating with official price lists from the factories. And then we, as a dealers, we have bigger discounts. So usually we have 40, 50, 60% discounts, which we get from the factory because we represent them in our country. We invest in this showroom. We buy samples and etc. We have a team of 33 people, so all of these people are educated in every factory, and it's take a lot of time to get a good specialist in this area. So that's why we are dealers, and we get this beautiful discount. So what we do when we work with the bigger contracts, we don't hide our discounts, so we don't play with them. So we openly show all our purchasing price, and as you see, we put separately our commission on top of these prices. So the commission is usually 25%, but it could be lower or higher, depends on the volume of the project. But this makes work with us very easy and simple. So if you're building some project, if you're doing some investment in some real estate project, or it's your own project, it's quite easy to work with us on the contract base. This gives you, we become more as a partner for you to give better conditions and to work transparently on all your purchasing, because usually it's quite a complicated process. So yeah, so basically this is the presentation that I can send to anyone that is interesting. So you will, or maybe we will have a list of emails. We will send the presentation to you. And if you have any questions, so I'm here. You can talk to me. And Victoria is my colleague, is over there helping me if you have any questions on the showroom. And if you want a tour on the showroom, we will make you a quick tour. Just approach us. Okay? Thank you very much. Thank you.